I'd like to call the Finance and Personnel Committee meeting for Tuesday, April 16, 2019 to order. Roll call, please.
Mike Williams.
Here.
Chris Zerble.
Here.
Mike Malczewski.
Here.
John Duska.
Present.
And Tom Selk.
Here.
Please stand for the pledge.
I pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all.
Is there any additions or corrections to the agenda?
I have none.
If none, I'll take a motion.
So moved.
Second.
Motion and second to approve the agenda. All those in favor, please say aye.
Aye.
Opposed? Motion passes. Action on the minutes for Finance and Personnel Committee on October 16th. Any changes? Need a motion?
Motion to approve. Second.
I wasn't here. Got a motion and second. All in favor, please say aye.
Aye.
Opposed? Motion passes. 6, comments from the public. Anybody here this evening that speak to anything that's not on the agenda? Not on the agenda. Okay, we'll move on to 7, action items, policy updates. Greg?
As part of the policies, I bring these forward each year, just as any updates. There aren't any updates, but just to put it through, it's kind of a statutorial requirement. No changes in policies. Again, our policies that are presented are pretty standard for all municipalities across the state. And we're just following those recommendations that the GFOA nationally and the WGFOA in the state recommend. So no changes as to those that have been presented in previous years.
Anybody got any questions on it?
Yeah.
Okay.
Page 17. Let me know when you're there, Greg.
Which policy are you looking at? If it'd be helpful?
Short-term debt management, page 17.
Okay.
Yeah, that's right, you might be different then.
Pull that up.
What's the backup page at the bottom, John?
17,
Okay, go ahead.
Oh, I see what you're saying. Okay.
okay. I'm wondering how we're defining short-term and long-term debt, and I did go to the end where there's a glossary of terms, but I didn't see it there, so what's the time period?
In essence, it's 12 months. It's pretty standard. Yeah, there's a lot of language here. Again, these are policies that are kind of boilerplate, if you will, but
Yeah,
12 months. Most of our investments, from an investment perspective, are in other municipal bonds. So as we would issue debt, we'll put out a 10-year debt service payment. People are investing in the bonds of the Village of Ashwaubenon. We would do likewise with other municipalities throughout the state and the country. So we have a whole portfolio of, and typically municipalities don't issue, 1-year bonds. Usually
Okay.
it's 5 to 10 years in that range.
so under 12 would be short, over 12.
Correct.
Okay.
Mhm.
Have we ever used the line of credit? That'd be a no.
Not that I can recall. Not since I've been here. No, I don't think so. That's usually more of a short-term cash flow issue need, and we don't have cash flow issues.
I know the school district does.
Sometimes a lot of school districts do because they run into, with the timing of tax collections and payroll and major expenditures, there's sometimes a month or 2 gap where they need to bridge that gap. So yeah, that's common more in the school districts than it is municipality.
Page 18, it's still part of debt management under revenue bonds.
Okay.
And if you take a look at that first sentence towards the end of it, I guess actually halfway through, revenue producing enterprise activities. What is that?
So what this policy is putting out there are different options that the village can go through. We use R.W. Baird as financial advisor when we go to debt, and they will recommend the best option. The village almost exclusively goes through general obligation bonds. These would be bonds that would be, to be quite honest with you, what exactly that means, I think they're not as secure. It might be a higher return on, or, if we were to invest in something like this, but it would carry higher risk. We typically stay away from that. So what we're investing in are similar to what we issue, general
Okay.
obligation type bonds. So we have, our overall policy is safety, liquidity, yield. So safety is the highest priority.
Right.
So if these were ever, there's a threshold that we just wouldn't cross. It doesn't mean we can't, but if
Okay.
you're really struggling and you need something that you're willing to gamble on a higher rate of return, that might be more of an option for you, a revenue
Well,
bond. We don't have any revenue bonds that we invest in.
well, that's really not my question. It says, "The village shall seek to finance the capital needs of its revenue-producing enterprise activities." So I'm wondering is what is an example of a revenue-producing enterprise activity that would have a capital need that we would seek finance for?
We may not have any. And so, again, it's an option. We don't use this option. So again, this is a very standard boilerplate
Yeah,
template. And so I understand what you're saying. I don't know that we really have any revenue-producing activities. We don't,
well, would Ashwaubenon may be one?
yes, I guess that's technically, it produces revenue. It
Okay.
covers our costs,
Well,
and
yeah,
it
yeah.
creates a little bit of a revenue for other services. So yeah, if we had to do some major capital improvements there, that might be an option. Adult recreational activities that might produce a little revenue, but we don't have capital needs
Sure.
there, right? So yeah, if we needed to completely revamp the lake, that would be an option to do something like that.
Okay, so that's, okay. Jumping to page 29. And this is under, it says investment policy on the top, and it gets down to reporting, is where I'm going, which is bullet point 13.
Okay.
Okay, so in 13, and then I'll also jump down to eventually 13C, it talks about the quarterly investment report. Now, I'm assuming, which is always dangerous, what we're going to be talking about next is the quarterly investment report.
Yes.
Okay. And maybe the question's more appropriate when we get there. I'm assuming that this report that we're receiving tonight is for the first quarter of this year.
Correct.
I don't recall receiving the report within the first quarter for the closing quarter. And my question is,
It's in there. We haven't had a meeting since, I think, October, and that's likely why. I always have them ready. They're always available.
okay.
It's whether or not we
so-
have a meeting to present it.
So it goes to a meeting issue.
Correct.
And then my related question is when you jump down to 13C, it says the investment advisor shall provide periodic reports, and they go to you. Now, is your plan, or is the plan that those are reported out? And I think you mentioned Baird, that, Baird advised this, that, and this, because I don't see that in the text that we have here.
So Baird is, I use Baird as an example. When we issue bonds, we use Baird. We use Associated Trust Company with our investments from a revenue perspective. I have all the detail of the composition of our investments, the performance level and the accounting, and all that level of detail is available. And I don't think I attached it this time. Typically, I usually do. So I
Okay.
can bring that next time and
Yeah,
show you
if-
that
yeah.
it's 20-some pages of lists of different types of investments. They're all just municipal
Well-
names and bonds and ratings and things like that.
I guess what I was looking for and wondering about is either in your writing, or, and I'll use Baird again as the example, in Baird's writing, a summary. I don't think we need all 20 pages unless,
There is a summary that's done in the annual CAFR that would be probably the easiest to decipher and read, where the auditors
Yeah.
will actually take time to go through it it gets categorized a certain way based on maturity dates, based on ratings, all the different investment types. So there's kind of a matrix that's put together in the CAFR that's done annually. That will be prepared and ready in June, and that usually goes before
Okay.
we'll have the auditor comes in, gives a final report, and at that time we will present that CAFR, which is 150-page document, but it's included
Well,
in there.
but there must be some summary narrative in there.
Yes.
Yeah, and I guess that's.
And I can
what
pull that out and
I
bring it
guess
to the
that's what I
next.
was looking for.
Sure, that would be the best way. Otherwise, you're going to get a lot of information that
Right,
it's hard to decipher. It's not.
yeah.
But yes, the auditors do that on an annual basis.
Okay,
That's my last question.
okay.
Aren't you glad?
So, is there any questions on any more policies? If not, I'll take a motion to approve the policies as presented.
So moved.
Second.
Give a motion a second. Any other discussion? All those in favor, please say aye.
Aye.
Opposed? Motion passes. Now to get to my next one. Oops, I just lost it. Go to investment updates. Sorry.
Yeah, so the next thing, to kind of what John was getting at, I provided you a summary of since we started, which is 2012. So what happened when we used to keep the majority of our cash, excess cash, with the local government investment pool. Obviously, rates were down to like 10 basis points. It was not doing anything. So we went and moved money into, we actually did an RFP with the banking services, and part of that was an investment option as well. And so in 2012, we moved in there, and you can see we were making a whopping 22 basis points, but it was double the investment pool, so it was better than nothing. And you can see over time how that has gone up to the point where our investments in the life of the investment rate of return now is 8.33%. And so you're seeing in the last year and a half especially, things are starting to compound. There's a bit of a lag, because I know for a while there, last year it was frustrating because it felt like our investments weren't returning. I could do better in a CD in the bank. Well, if you think about our debt, you have things coming on and off. So we were able to borrow at really low rates, which is great. Well, from the investment side, you need to wait for those to mature and then new ones come on. So there's a constant recycling of different issues out there, but you're seeing the higher rates really kicking in. And so we've seen some good rates. So this year alone, there's a couple numbers I put out there. The interest rate itself is one number, and then it's just a total change. There's things like change in accrued income and unrealized depreciation. So what that means, as the market is going up and down, your portfolio changes, just like your personal investments. But at the end of the day, you're going to get what the yield was on it. It's just getting there.
Yeah.
Basically everything goes off of the treasury and the different exchange percentages and growths, but it's just slowly going up and up and up, which has been good. So it's doing really well. Right now, this year, it's 3.71% over the first 3 months, and that should just continue to improve. I would expect that to continue. Even with the interest rate environment kind of holding steady, people are able to borrow, get rid of the old stuff at all that lower interest rate incomes going off, and even at the higher stuff coming on.
So even with how the Fed maybe a month ago announced that no more interest rate increase for the balance of the year. So do you still anticipate?
We will, because there's a lag. There's a bit of a lag. So you still have some of the portfolio is still sitting at lower interest rates. And as that comes off, it's getting replaced with stuff at these higher rates. So yeah, it'll plateau eventually, but it'll still grow as it's catching up. Kind of like a fuel surcharge, right? So
Yeah.
if you're a transportation company, the fuel surcharge, when fuel prices go up, it's fast to come at you, but when the prices go down, they slowly ramp that away, right? It's the same concept. It's just going to take some time, because the older investments are coming off, and that's at a lower interest rate, being replaced with something, even though the rates are stable, it's higher than the stuff that came off in the previous years. And again, we're real safe, so we're not going to see, we don't have investments in some real crazy stuff that's going to put us 10, 20%.
Right.
But certainly better than what we're getting on interest rates in the CDs.
You have a list of qualified institutions, and according to what I'm reading, it should be approved by this group annually. Is that,
Basically,
Is that
it's every
available?
bank in the village, for the most part, is qualified to take our investments, but their rates aren't comparable to this. So a lot of, some communities, especially back, 5-10 years ago, when things were going down, they were going at different CDs, and they would diversify with every bank in their area, so they weren't all tied into one, and there's ways to do that and track different rates and things like that. So we typically, our policy is any bank in the village, maybe they can't take $5 million, but they can take a $100,000 CD. That's a lot of managing that,
yeah.
But I can provide, next meeting, I can provide you the lists of all of the qualified institutions. Essentially, it's every bank in the village is qualified. There aren't any that wouldn't qualify.
Okay. This is for informational only right now, and if you have any questions, we can talk about it at the next meeting when you bring the other stuff. Items for next agenda. Anybody else have anything else?
For next agenda?
Yeah.
Yeah. We're not voting on this. At our last meeting, I raised a question about the naming rights fee that was paid for the stadium. And immediately, like the next morning, Tony was kind enough to send me the contract with Big Top, and I'd like to put that contract on it. Having read it several times now, I've got some more questions.
Okay. Okay, I don't know, well, I've seen it, but I can't verbatim say
Right.
it or anything, so that's fine. Anything else? Okay, need a motion to adjourn.
Move to adjourn?
Second.
All those in favor, please say aye.
All right.
Thank you.